What's going on, my trading family? It's Edward, Deadly Crypto here. We're going to be talking about risk management in this video. So first things first, what everyone will tell you whenever you get into this space is you need to determine how much you're willing to lose before anything else. If a reasonable stop loss is outside of this range, then do not take that trade. So if you have, for example, $1,000 in your account and you're looking to take this trade right here, if you take a 1.14% loss on your $1,000, that's going to be an $11 loss. So you have to convince yourself if you can take that loss, and if that loss is worth a 1.94% gain, which would give you $19.40. So you have to determine if that is a valid trade-off. If you can sustain that loss and you know that your trading account will survive after that, then you can go ahead and take that position. Same thing goes for here. You'll need to calculate that loss if it was off of $1,000, if it was off of $25,000, if it was off of $300,000. Before you take a trade, if you measure out your risk to reward ratio as you should be, and you'll need to determine if you can sustain that loss or not. If you cannot, then do not take the trade, period. That's the first rule of risk management. If you can't sustain that loss, then don't take that trade at all. Now we want to establish a confidence level in our projected trade. So based off of our analysis, we can see that we're in a previous support zone. It's been used once as support, and over here it's been used as resistance as well. Let me just go ahead and zoom out and show you that part. So here we can see there was the previous support check, and here it was used as resistance. It was used as resistance here, and also started to be used as resistance here and here. So this is where we get this support and resistance zone. It's flipped, tested support once. Now here we are trying to test it as support again. So if you want to find a long entry, you're probably going to find your best long entries around here. If you get stopped out here, you might want to try and find a better long entry instead of writing this down. So we've identified these risk to reward ratios, and now we have to determine how confident we are in them. So if we want to take this long, which is the opportunity that's right in front of us, we have to determine how confident we are in this position. The more confident we are, the more money we can put into this trade, or the more leverage we can apply. So generally, traders will tell you that you don't want to use any more than 2 to 3% of your balance at any time. While that is a great rule of thumb to manage your portfolio and avoid loss, it's not going to help you get gains any faster. That's a very safe approach, and it will keep you from sustaining a loss, but if you want to increase your account faster, you're going to have to step out of the boundaries a little bit. If you're confident in a trade, you can use more than you do in other positions. So if I wasn't very confident in the position, maybe I would lower the amount of funds being used to about 5 to 10% of my portfolio, or about $50 to $100 in the event I only have $1,000 to trade with. Now, if you're not using leverage and you don't know how to use leverage, don't try to jump into leverage until you understand how to trade a bit better. But if you do use leverage and you have used leverage before and you want to try and increase your portfolio quickly, leverage is a great tool if you know how to use it properly. So if you're not confident in this trade and you're a leverage trader, you might want to use 2x, maybe 3x, so that way you don't wipe your account in the event you use that much leverage. If you use 10x in something like this where you're not confident, it could potentially cause you liquidation. Just as quickly as you can make money in futures, you can lose it. So you need to understand if you're using leverage in your trades, based off your confidence level, that will give you a gauge on how much leverage to apply. So although we've looked at this current market scenario and identified this for Bitcoin, you can use this to determine a risk reward ratio for any market scenario. This is just the one that is currently upon us. Ideally, we would like to wait for better signals and better indicators to tell us to take an entry. However, for the purpose of this video and for your learning, we want to show what it's like in the market, because not every market is ideal. So if you wanted to gauge positions, this is a setup of how you could do so. You could even try and short some of these instead of waiting for this longer outbreak. If this holds true down here, after you close this long, you can try and get into a short here and adjust this now. So if that was your take profit goal, now you're playing this resistance. If price comes over here, you're thinking, you know what, it's going to continue upwards, I need to close that short. Now you're into a really good short trade if you start to target some of these areas back down. So that's how you can manage your risk and determine your risk to reward ratio and establish a confidence level in your trade to determine how much money you want to put into that trade. I hope this video was helpful. As always, thanks for watching.